Hey, hey, good morning, everybody. How are you? It's your buddy, Uncle Bruce here from Stock Markets with Bruce, holding my big jug of coffee here. How you doing today? This is February the 21st. Can you believe it? We're almost out of
Holding my
February.
big jug of
Let
coffee.
me do that. I can't believe it. We're almost done February. It's the 21st of February. Just 2023, by the way, in case you wonder what year. Wow, just another fun time. We're down 328 points at the moment on the pre-market for the Dow. We're down 35 on S&P. We're down 137 on NASDAQ. The markets are off about 1.1% for NASDAQ and about 1% for the Dow, just under zero point 0.9 for the S&P. Oil holding a gain, but it's slipping. It's still up 57 cents a barrel. In West Texas, we're at 76.91, but we've backed off almost a dollar from its highs, I think. Seems to be backing up just a titch. There's talk here, all kinds of it this morning, about whether or not interest rates have topped out, will go higher, how long they'll stay where they are or higher than they are, when can we see the beginning of a pullback. The other chat that's going on is inflation, because that's the reason rates are going higher or staying higher. The inflation problem. We get conflicting reports coming out from various agencies. We'll see one report saying that inflation is a little lighter than it was last month. Then we'll find out inflation in a certain area of the economy is higher, and that's a problem because that's going to show up in the big number later. And so there's all of that going on. It is not a uniform good news story on inflation. That's the problem. It isn't, and it won't be, because we have not yet seen the inflation problem we're about to see that is really going to create issues. And that is 70% of the United States economy is what's known as the service sector economy. It's Americans buying stuff from Americans. That's what it is. Just to kind of put it in plain English is what I like to do around here. It's when spatulas and cups like this are imported into the United States from China or elsewhere, and they land in the US. They're brought in by perhaps American distributors, which would make sense. These American distributors now, as soon as this thing lands in the USA, it now means that the price of this to you, the consumer, is totally dependent on everything America once it lands. Now, to make this in China with its lid and its rubber thingy here and the cover and the assembly, I can imagine that you produce 1 million of these in various colors. You can produce one of these for $1 a piece, $2 a piece, in millions at a time, not 20 at a time, but gazillions at a time. And you might put a brand name on this, and you might not put a brand name on this, but this version of this thingy here is made for a lot of different entities with different names on them. And they're imported into Germany, and they're imported into France and Italy and the UK and Poland and everywhere, including America. And so once the Americans get it, once it lands in Long Beach, California, in a giant container or 20 containers or 50 containers, I don't know how many of these are coming in, they get redistributed from there. And that's where the American cost factor comes in. You've got to get it off the boat onto land, on out of those containers to container onto a truck, container onto tracks, trains on tracks, to distribution centers. You then have those units emptied by American labor. You have them sorted and stored, and then you have them redistributed yet again. And now they go to whichever spot they have to go to. Now, if these are going to go to Target, where I bought this from Target, will receive a certain number of these in boxes from these containers, and they'll go into their distribution network. These are giant warehouses all over the place. And then from there out to the Target stores. And then they get into the back of the Target store to be repackaged and rehandled again, to be put on the shelf. And then, of course, they're sitting there ready to be sold, to be picked up by consumers, and to be checked out by the cashier, who is the last employee to be paid on the way out the door to my house. And hopefully, this cup works perfectly. It doesn't leak. It hasn't got issues, and I don't bring it back, number one. And number two, I'm a satisfied client, and there you have it. The thing is, I don't get to buy this for $4, even though it might cost $1.50 to make, $2 to make. I'm not getting this at $3, $4, $5. I'm lucky to find something like this at around $20 a pop, $20 American, which in Canada is $1,000. It's unbelievable, the exchange rate. You have no idea, you Americans, you have no idea what the exchange rate is. Well, there's my cup holding my cup of coffee. And my attitude on it is I'm here for 5 months, using this every day for 5 months. It's a 150-day use item. And then I have to decide what to do with it, because I'm a nomad. I have nowhere to live. And I really can't put this in my suitcase to take it home with me, because I have this at home already. What do I do with it? Probably leave it here in this condo for someone to enjoy down the road who will rent this condo another time. So for 150 days, I'll spend 15 cents a day to use this. That's how I figure. That's my mentality on it. In any event, the service economy, from truck drivers, train operators, forklift operators, warehouse people, inventory managers, distribution specialists, store managers, department managers, display people. It goes on and on and on. This item has got American costs on top of it. When it finally gets to the retail shelf, when I buy it and walk out the store with it, there is a phenomenal cost for every single item brought into the United States, brought into Canada, brought into the UK, brought into Germany, brought into France. Service economy costs. In America, the US GDP is made up of 70% of its GDP is services. And this is just a sliver of the services. And that inflation rate has not yet shown up, because we haven't gone through an entire full year of wage gains that have come into the economy. There are people, this morning we found out, Home Depot announced good earnings, made a lot of money. They announced $1 billion of additional cash is going to be earmarked to be used towards its employees. They have got to give them raises to keep up with inflation, to not lose these people to another employer. It's a race to the bottom, and it's a race for talent. And there are certain corporations that are overstaffed and can afford or will announce and have announced to us, we're letting people go. That's great, but that means you're not growing. That means you are shrinking. You are out and out admitting to the market that if you are proud to announce that you're letting 10% of your employees go, you are shrinking. Your company is failing. That's what that means. I'm sorry. You do not get larger by getting smaller. People say, oh, they're getting more efficient. They're getting much more, way better with their handling of their personnel. No. You could say that, but these aren't stupid people going into this. They hired people 2 years ago, 3 years ago, because they needed them. Now, all of a sudden, their business is backing off and they're dumping them. Whereas with Home Depot, they're adding $1 billion to the payroll, because they're trying to hang on to people in the service economy. Walmart is having the same problem. Target is having the same problem. Costco is having the same issues. Mom and pop retailers are having the same issues. To try to retain staff, the battle is on to hold on to these folks and keep them coming back. No. If you take the lowest of the low in any country, and these folks can earn $2 an hour more, guess what happens with all that money? It doesn't go into a savings account. The person earning $14 an hour, now earning $16 an hour, doesn't put $2 an hour away towards their yacht down payment. No, that $2 an hour, of which is a buck 50 after tax or 160 after tax or whatever the hell it isn't, that is going right into the grocery store, going right into the gas bill, the cell phone cost, whatever else has been going up, because the lowest income denominator of Americans, they're broke. They were broke last year. They were broke 10 years ago. They're going to be broke 10 years from now. They are struggling to get by. And every nickel they can get their hands on from a raise, they'll just spend it because are already behind the eight ball. And so this is delaying, or this helps to delay or helps to defray the notion that states, cities, and federal governments will not have to support these folks as much that they would have had they not been able to get a raise. That's it. So the food bank thing and the unemployment insurance and equalization payments and whatever you want to call it. Every country has their own social systems to help the lower end. These lower end systems are under unbearable pressure, and governments are borrowing money to keep their governments funded. If you can get these folks a raise, they can earn more money, then they're better off. And that's just my socialist way of thinking. Like it or not, I think it's reality. Nonetheless, it is what it is. But today's show, have you noticed the title of my program today? Retirement accounts being saved by option premiums. I was watching this week, and you ask yourself, what does Uncle Bruce do when he gets 3 days off in a row? I mean, what does he do with himself? He's, Monday to Friday, the guy is just consumed by the stock market, and he's handling all these questions from his viewers and trying to guide them down the road to richness. And he's really working with a bunch of his viewers on helping them understand and comprehend the idea of writing stock options against stocks that they own, their portfolios or what have you. And what I watch when I'm off is I whatever YouTube sort of throws at me. I'm in front of my computer and I'm just kind of watching YouTube here and there, looking at my channel, and I'm looking at the performance of my channel, and then I just see what YouTube suggests to me, or I'll come up with something in my mind. I go, oh, let me look into this topic. Well, a topic that came up were 401ks and IRAs and retirement accounts. And I saw article after article, video after video on all kinds of platforms, and including Wall Street Journal platforms and CNBC's platform and CNN platform and independent economy type platform, talking about the retirement situation, the dilemma that in most cases, I'm reading American news. So it's talking about American retirees or retiree wannabes, American retiree wannabes, and how story after story was coming out about how in the last 5-10 years, Americans were expecting to retire relatively comfortably from their pensions. And then Social Security was just going to be an add-on check to just help out, because if you are a middle class or higher American income earner, and you look at how much you're going to get every month from the United States government in Social Security, you are horrified to think that you would have to live on that. You'd be horrified, because you're going, I don't know how anyone can live on that. And yet there are millions of Americans who are forced to do this. Well, retirees in the last 15, 20 years have had a rude awakening, because pension plans have completely changed in the United States in the last, since like 1980, 1990 to today. And the effects of this change are now beginning to come home to roost, and have been for about 10, 15 years, and will continue on for many more decades. And that reality is, people who used to work for a certain company, one company for all their lives, or two companies for 20 years here, 20 years here, they could rely on a pension that they would be getting from that employer pension plan that they were part of. I'm talking about private sector people. I'm not talking about government employees. I'm talking about private sector. In the private sector, there used to be pension plans that are just like government pension plans are now. Government pension plans have always been the kind where you pay into the pension plan, and at the end of so many years of service, certain number of years of service, you would then get a guaranteed income, inflation adjusted, generally speaking, for the rest of your life. And people figured out, oh, I gotta work till 58. I gotta go until I'm 62. I gotta work until I'm 66. But after year 62, I've topped out, and my pension won't go any higher. So at 62, I might as well just pack it in and take my pension now. Those pension plans that used to be in effect across all of American business, practically 90% of American business, a huge number, just the massive amount of plans used to be that kind of a pension plan with medium, large size companies and up. And so that covered a zillion Americans. It all started to change in the late 70s and 80s when the 401k showed up. The 401k pension plan changed everything. And the biggest change was that instead of the employer being on the hook for your pension plan to be funded, and that you, after 35 years of service, 20 years of service, whatever that number was, you guaranteed a salary, guaranteed a pension. Not anymore. Now the 401k is where you put in, say, 4% of your paycheck every month, and your employer puts in a portion against it, maybe half or as much or more, depending on the company. And that money would go into this plan, and then you had the choice of what the plan did with the money. And you had limited choices in many cases, but you had choices, and you could put the money into the stock of the company, or you could put the dough into a series of mutual funds. It might be Fidelity family of funds would be offered to you, and you could pick any Fidelity plan you wanted. The mutual fund business of the United States and Canada and elsewhere exploded in the 80s and the 90s, absolutely exploded, because these 401k plans came into vogue because corporate America, corporate Canada, and corporate others figured out, hey, we can lay off people, we can furlough people. Everyone has a 401k. They can shift it with them when they go, depending on where they're going to and what they're doing. But we don't have to guarantee this pension anymore at the end of so many years of service. It's up to the employee to decide what to do with their money. And some employees were happy about that, going, that's what I want. I want control of my money. Where others are going, I don't know what to do with money. I have no idea how to invest. I'm a dock worker. I'm a shipping receiving guy. I operate a forklift. I push a broom. What the hell do I know about the investment business? But it all came out at the end of the day that the 401k was the liberator for people, theoretically, but it was the great liberator for corporate America. It allowed corporate America to just pay so much money towards your salary into that pot, and then we can wash our hands of whatever happens to you when you're 55, 60, or 65. And if your 401k that you've put in, say, 4% of your salary all your working life, and we've matched it, and if that money isn't enough for you to live on as a retiree, that's not our problem, corporate America says. You had control of your plan since 1980, 85. Hey, you made wrong decisions. You made poor decisions. Others who put their money into the right mutual fund category and the right growth funds or whatever, and those funds really grew and compounded, they may well have enough there to really live on. Those who have bad timing, who joined the firm and for the first 15 years of the firm, the deal they had with the firm, they were putting money in there and what have you, and the markets were rising, and then the markets collapsed for 3 or 4 years, and that those final 5 years didn't turn into the big growth, compounded growth you were expecting. You have to leave the company, or you're at 65 and you're out, and your fund isn't worth $2 million. It's worth 1.1 million or 800,000 or 300,000, or way less than that. You're in trouble. And that's just the way it is. Whereas with defined pensions, a defined pension plan is a guaranteed number that you're pushing for after so many years of service. And that is why firemen look at age 50, 55 as the big one. Policemen look at age 50, 55 as a big one. This used to be the norm for all kinds of workers across Canada and USA. You'd figure out what year retirement would be. Teachers did the same thing, and they realized 30 years of teaching, 30 years of firefighting, 28 years of police work, whatever the job you had, After that, it's a guaranteed pension plus Social Security. And if I work on the side, mowing lawns or something like that, or babysitting the kids, or whatever other income you're making is hobbies, whatever is your business. Today, most of Americans are in 401ks or they're in plans where they have to handle it themselves. And there are people who find me on this channel who are realizing the mess they're in. And they're figuring out very quickly that at age 45 or at age 50 or at age 55, 60, 65 or higher, they're looking at their retirement plans and they're going, these plans, this plan that I have with my wife is not large enough. It will not be large enough in 5 or 10 years from now or 15 years from now. There's no way it's going to grow enough for us to be able to retire, even in the lifestyle we have now. And we are going to be dependent on Social Security, or we're going to drain our pension plan in 15 years after we retire. 15 years, that will be zero. And all we have left is the house and our Social Security. And we'll then have to sell the house or do one of those reverse mortgages, and we'll drain that equity out. And depending on how long we live, and hopefully we're happy and healthy, we'll go a long time, we will eventually be down to Social Security. And there are folks who have figured out at age 45 that they already know, I can't retire at 55 like I thought I could. That would be 30 years of service with my company or working in my adult life, 30 years of working in my adult life, and it's not there. The retirement is not there. And now people are greeters at Walmart. They work part-time at Albertsons. They're doing jobs we see people working in that we say to ourselves, you shouldn't be here. You shouldn't be working at this gig. You really don't belong here. I understand why you're here. You're here economically. You're here because you have to be here economically. But boy, it wasn't supposed to be like that. And folks of that ilk, more and more of them, are finding this YouTuber. And they're desperately looking for answers to their dilemma. And they don't know what to do. And they've some find their way here. And they have figured out that by writing options on these accounts that they have, these ETFs they own or stocks they have, or they adjust their 401k to put it into a self-managed plan, and then they can write options on that depending on the platform you're using. They're writing options and enhancing the returns. And those of you who are in your late 30s to mid 50s, late 50, even up to 60, there's many of you out there who watch me who are figuring out, my God, I have got to figure out how to write options to enhance my revenue in, because I'm only receiving dividends every month or every quarter from whatever investments that I've got. And these dividends are 3 to 4% a year. And inflation right now is 6 to 7. And the inflation rate that you are actually dealing with isn't 6%. We all know that. The inflation rate that you and I actually are enduring is 15, 20%. That's the true inflation rate that we have in our lives. This 6% inflation, average inflation, we don't know where that is. We can't find it. It doesn't exist. And so there are folks here who need to find a way to enhance revenues, to build their retirement plan up while they're still working, to get it to the point where it will take them for retirement. Because the problem here with retirement and with life in general, there's a catch with being alive. The catch being alive is eventually you're going to die. And between now and when that happens, the hope is that your life is of a quality where you're not in the hospital all the time. You're not subject to all kinds of diseases. You're not subject to medical bills that will crush you. The hope is that you live a healthy, productive life, and that you are not draining your assets for yourself, your wife, your kids, your grandkids, whatever the issue. And all of a sudden, that lifestyle you thought you were going to have until you were in your 80s, which is average life expectancy, we hope, just isn't there. And you're going to be broke in 10 years, 5 years, or you're already just about there. And this is where I'm reaching out as much as I can to as many people as I can to find this channel. This is why I beg you people to give me thumbs up. So, I mean, I beg you guys, give me thumbs up so that people find this channel. Those who really need the help to find this channel, because they'll find this YouTuber who will say, maybe I can help you. Maybe I can. I'm not the answer to everybody's problems, but if what I talk about can help people add $2,000 a month to the value of their 401k, and they're now 49 years old or 53 years old, and they can add 25,000 a year to their 401k on top of what they're putting in now and what their employer is putting in now, they can grow this thing for a decade, compound it, then they will really add $500,000 to $1 million in value to their 401k over 10, 12, 15, 18, 20, whatever the time frame is. And this is a conservative strategy. This is not one of those bet it all on one stock and hope it goes up so you can retire game plans. This is one of those become a manager of your own assets, take control of your life in every aspect, not just cash on hand and investments, but your retirement plan. And this is what has to happen in order for some of you out there to make it. Now, there are millions out there who will never hear of me. They will never find me. Then there will be thousands that will hear of me and find me. And all of them will not benefit from a single thing I say because of many, many reasons. Okay. One, the face is made for radio and it's just not pretty enough. Number two, the set is boring as hell. There's no fancy graphics. There's no fancy anything. Or the message that he brings out, I don't think I can do that, is what initially people will say. They'll go, I don't think I can do this. I don't think I can manage my own assets. I don't think I have the confidence, or I'm terrified of having to run my own affairs. I'd really rather have these money managers do this for me. If only they'd give me 12% returns, 20% returns. I wish I could get the returns that billionaires are getting. Well, unfortunately, many people are finding out that's not the case. They have to do it themselves. And then there is a sliver. Again, I will say there are a sliver of you out there who find your way here, begin to listen to what the old man is saying, and they read the comments, and they take the courses for option writing, which is what I talk about. And they go, I've done my homework. I've checked with my banker. I've checked with my tax person. I've checked with the 401k administrator in my corporation, the company I work for. I've done all the inquiring I can do, and I figured out that through certain platforms, I figured out which platforms I can use, where I can transfer my 401k from where it is to where it's got to go, so that I can manage it on a day-to-day basis, including the ability to write options on my positions. I can shift what's inside that 401k into positions that I need to have to write options on it. And I want to write options on Apple shares, Bruce. That's all I want to do. Or I want to write options just on GameStop, or I only want to write options on Cisco, or I want to write options on ETFs that own Apple and Cisco and Amazon and FANG type ETFs. I want high growth ETFs, and I want to write options on those. I want to enhance the performance of investments. Because of you, I figured this out. I can do it. And I understand it'll take me 3 months to 6 months to a year to totally get this. But I'm prepared to invest the time, because I thought all along that my 401k at work and my pension planning and all this would be the answer for me to live a comfortable life and not be a burden on any of my kids or on society in general. And I wanted whatever Social Security money coming in, I just wanted to give that to the grandkids in a trust of some kind. That's what I thought I could do with it. I didn't realize I might have to live off of Social Security. And the politicians out there scare the shit out of me, because some of these guys are talking about ending it or limiting it or restricting it or taxing it or who knows what. And so, welcome to the party, pal. If I can help you in any way, I couldn't be more thrilled. But as I've said a million times before, you gotta want this. And there are some of you who don't want this, but know you need to do it. You've you've been cornered, you've been put into the corner, and the gun is to your head, and you either take control of your assets or you suffer the consequences of the possibility of being destitute in your old age when you never wanted that to happen because you were always the hardest worker, you were always the most loyal employee, and you saved like a dog to get by, only to find out at the end you got nothing to show for it because inflation has eaten you alive, benefits aren't there, companies went broke, pensions blew up, and so on. And this is what I've been watching on the weekend. This is part of what I was watching on the weekend. I watched other stuff on the weekend. But I was watching this on the weekend and I thought, I have got to address this gorilla in the room with you folks. I've got to bring this up because there are a lot of folks out there who hear about me and they think, oh, this is a get rich quick guy. He can show me how to make a whole bunch of money real quick in the market. And that's all I want because I'm 38 years old and I want to get myself a Corvette, just to show me how to make a quick couple of bucks. And this is great for me. But then I do realize, and I have my one-on-ones with you folks, and I had a couple more this weekend. I have one-on-one sessions where I hear this story. I hear versions of this story of the retirement problem story. And I sense it from some of your comments from time to time. I also get something else. There are many of you who watch me who don't talk to me. You're members of the channel. You're making a contribution every month through YouTube to me as being a member of this channel, which I am mega grateful for, as all of you know who are regulars. You know how much it means to me that you're members of this channel. You've joined the club. But so many of you are here, you do not talk to me. You do not make comments over here. And I know why. I know exactly why. There are many reasons for it. But one of the reasons is the pickle you're in, you don't want the rest of the world to know. Totally respect that. Like that is the number one thing. Shyness is something. People are very private. I get it all. I used to be a stockbroker and I had clients that I would talk to, but they would never come into the office. They were too terrified to come into the office because they didn't want to be recognized by anybody else. They really wanted guidance, financial guidance, but didn't want else to know about it. So meetings would be held in their homes, or I would have coffee with them at a coffee shop many blocks away from my office or their office. Lunch would be had in a suburb type restaurant, just somewhere private. I got that as a broker. I got that. A lot of my contemporaries didn't get it. I had salesmen who didn't get it through their thick skulls that every client is a different situation. They all thought stock clients are stock clients. Never got the big picture. Today, it's the same here. There are folks who will talk to me on the air. There are folks who love one-on-ones, but there are others who want to talk to me in a very private setting, or they're just here to absorb. And they're going, Bruce, when you hit the spot that I want to hear about, I'm tuning in. I'm really tuning in. And I know that there are a number of you or folks in your family personally that are in trouble with respect to their 401ks, their retirement plans, their asset base, they're an economic basket case. Or they thought they were doing well, and then they got the shock of a lifetime at age 53 or 55. Within 10 years of retirement, they found out, oh my God, it's not there. It's not going to be there. And now they're asking themselves, why did I work my butt off for 30 years to get to this point? And now I'm in this position. And then the others who find out cruelly that within the last 5 years of getting to retirement, they become very ill. Their spouse becomes ill, and now the savings are being drained out from medical expenses and hospice care, and it just goes on and on and on. And I get it, and I'm aware of it. And so, if I am able in any way to help people find a solution or a partial solution to a cash drain problem, where how you rearrange your assets to a point where you can generate revenue into you conservatively from option writing, that's a win. That's just a win, because if it's a partial solution, it's a partial. If it's a full solution, great. If it's the answer to everything, fantastic. And those of you who are 25, 35, 40, you just want to quit your day jobs, I get that. I get that motivation. Believe me, I get it. But those of you who are 40, 45, 50, 60, 70, who need help and assistance to grow your assets, to be able to have a dignified retirement and the ability to even think of retirement rather than working until the day you die. And how many people know someone in your family that has to work until the day they die? Do you want to be that person? Obviously not. And welcome to this party. I sure hope I can help out. Again, thank you for those of you who have been seeking me out for one-on-ones. Those of you who've been watching or taking classes for whatever the purpose is, there are 14 of them available on my website. And I keep getting comments all the time about how appreciative people are about the classes, how effective they are, and how explanatory, how they explain the market and the option market in a plain English kind of way. It really has opened people's eyes and going, I never knew this existed, and I could have taken advantage of this, and I can now take advantage of this. It's never too late. It is never too late. Even if you have a $20,000 account that should be a $2 million account because of retirement, you can build a $20,000 account up from here. And you might as well do it, because what else? What are the alternatives? Once you go to zero, that's not an alternative. So let's get on with it, and help you grow yourselves further ahead financially. Anyway, thank you all for all of that, for all of your support and just being here. I appreciate it. Those of you who are members of this channel, man, you guys are the best of the best of the best. I thank you. It's tremendous. Great to have you here. I haven't read any of the comments that have come through here. There are some doozies here. I haven't read any of these guys because I'm ranting. And so I apologize if I'm not getting to you, or I'm not reading your comments or your concerns or what have you. I just, there's only so much I can read when I go through all this. If there's a specific question you have about retirement or what have you, and you want to talk to me, or you want to get an answer from me, you can always try to send me an email, which is my private email. I'll do the best I can to get back to you, but you have to also understand that I'm on the air 3 times a day. Today, 3 times. Tomorrow, I'll be on the air 4 times, which includes tomorrow night's 8 o'clock primetime show with your buddy Uncle Bruce. But for some of you, the answer to your questions might have to be a one-on-one. You're just going to have to make the investment to do that. But then you've got the opportunity to take a few days and write questions down, and then hit me with those when we get together on one-on-ones, and then I can really zoom in on your specific issues and try to help you out that way. Now, folks here on this channel are some of the greatest YouTubers ever, period. And the reason that some of these folks that you see over here are just the best of the best, because some of you will ask me questions while I'm yapping away, and some of these folks have the answer for you. They know the answer to your question because they had the same question 6 months ago, a year ago, last week, and they'll throw you the answer before I can even read the comments. So again, thank you for all of you out there who are doing this, and I really appreciate you all. Whether you're a member of this channel, helping out, and a follower of this channel, it's fantastic. I welcome you all, and it's great to see you all here. Okay. There it is. Everybody has, like I say, a unique situation. H. Gregory, Bruce, you couldn't be more right. I transferred my 401k being invested into some random fund by my employer into an IRA, and I'm writing covered calls for gains while the market trades sideways and down. There you go. There it is. I tell you, it was unbelievable. Susan Shop's about Bama, babe. Yes. When push comes to shove, her advocates were having serious cash flow problems. The husband had lost his job with her moving in, so her $1,500 Social Security check was needed. My God. It's just unbelievable. There are heartbreaking stories out there. And I just, you know what I mean? It is just what it is. There are just some real heartbreaking stories out there. And, for some for some I can't help. For others, I can. I hope I can help many of you any way I can. But I appreciate you all. Appreciate all the situations you're in, and I do the best I can with what I've got. I hope I can help. Thank you for those of you throwing thumbs ups our way. 106 have come in. We are desperate for 200 thumbs ups this morning. Every morning show. I really shouldn't have just 200. I really should be going for 300, but I am desperate to get thumbs ups in here to grow this channel, to get the message out. And if you can help out, appreciate it. You might actually be helping a relative that you don't know is watching or might watch if they were to be pushed by YouTube to watch. I don't know. I can't say, but growing this channel is what it's about, and I thank you. Alberto, thank you, my friend. We are ready to roll. Let's get this party started. We have 18 minutes to go. Hector, thumbs up 108. Thank you. Let me know what thumbs up your number you are if you don't mind. I appreciate it. And let's see what is going on. Uncle Bruce, I wasn't paying attention. I let my in the money option expire for HBQ. Needless to say, I'm happy to see it's on the dip right now. How about that? There you go. We'll follow this market this morning as we do every day. I see right now in the pre-market, let me just double check. I think we're down 339 on the Dow, or off 38 on S&P, and we're down about 143 on the NASDAQ. I see Rocket Lab off about 10 cents. SoFi at 649, down 13. GameStop off about 59 cents to 21.40. I've got, it looks like Matterport is indicated at 353, down 7 cents. 23andMe is off 6 cents. Spire off about 2. ATIP down maybe 0.8 of a penny, not much there. I don't have anything on Smart Rent yet. Sixtera was up 2 cents at 250. Over on Apple, down $2. Goldman down 3.5. Cisco off 38 cents. Tesla down 322 at 205. ARC Innovations 108 lower at 40.77. Microsoft down 254. Bed Bath Beyond down 7.5 cents to 173.5. Pfizer down 14 cents. HPQ down 31, 29.86. Carvana down 25 cents. Alphabet down $1.30. That's Google. Amazon down 160, and Nvidia down 378. That's what I see going on there. And we're waiting for the market to open up. We heard this morning from Walmart and from Home Depot. Both stocks are down on the pre-market, even though both companies made numbers, they made profits, but it's their outlook and the fear of the U.S. economy slowing down that is hurting them, and the fear of higher rates. And this will not go away. This is not going to go away. There it is. What else is going on here? Well, Cindy B, number 116. Thank you, Cindy. Appreciate this. And we're watching for Rugman here. He might well be on the way today to take some stocks down. We'll watch for that. Time will tell. We'll see how deep this stock loss really is. How low will the markets actually trend? Going to find out soon enough. It's a 1% drop on the Dow, almost the same on S&P, 1.2% drop on NASDAQ, and oil is up just 44 cents right now. Okay, Mr. President Biden made a trip to Kyiv yesterday, obviously top secret, and is now in Poland, and showing the folks in Europe that America is behind Ukraine all the way, it would seem, and I'm sure there are a lot of Ukrainians and the Poles and the Estonians and the Latvians and Lithuanians and others are grateful that he's doing what he's doing, showing America's resolve to keeping the Russians at bay. What a mess over there. Just absolutely unbelievable. And this is not going away. This is not an 8-second solution scenario either. So there's that. Okay. Let's see what happens as we get ready to start trading. Thank you all for popping through here. We're going to go member only now on commentary. Please become a member of this channel if you'd like to comment all the time and use those incredible knee emojis. If you want to use the Knights of Knee emojis that we've created, you're welcome to do so. We cannot thank you enough, Jennifer and I, for becoming members of this channel and staying members of this channel. Those of you renewing your memberships every month, you're just the best. We thank you. The membership numbers are growing. The Gold Bagel member numbers are actually popping up a little bit right now, and we are just going, yeah, this is great. That means Wednesday night's primetime show is becoming more and more popular. I'm hoping that I'm hopeful that the Wednesday night primetime show, 8 o'clock Eastern for Gold Bagel members is one of the reasons that you're joining this channel. I'm hopeful that you're joining this channel because of the trade alert show that I do every morning before the 8:30 show starts. I'm hoping that is another reason that you're here. Again, just that your Gold Bagel membership means a lot to us, as the regular membership does too. We thank you very much. The advertising from YouTube is minimal because we do not have thousands of viewers at a time watching this channel. We are a specialty channel in a specialty area, and we attract a certain type of viewer, certain type of investor into this market. But I'm happy to report that it seems that the followers of this channel, huge majority, are actually making money in a bear market. And man, is that good stuff or what? And those of you who are bringing in income now every month, every second month from option writing, we Jen and I could not be more delighted to hear these updates. These one-on-one sessions that I have are so fantastic to be part of, and to get emails from you folks letting me know how you're doing and whatnot. It's fantastic. Just, man, it's great because we are watching and we're noticing. I in particular, because I'm on YouTube a lot. I am noticing how many channels just aren't here anymore from the financial side. How many have gone? How many so-called massively experienced people who are giving out investment advice just aren't around anymore. They're just erased from existence. They're not around. It is incredible to have witnessed that in the last 2 years, but I'm not surprised. The kind of advice that was being handed out to people was so ridiculous. And those who were trying to day trade their way to wealth, it really doesn't work. Hey, there are lottery winners out there, and I admit that. There are winners in the lottery. There are winners in Vegas casinos once in a while. You hear a whoop whoop, somebody won 10 grand. But day trading on the stock market, you have to be right 99 times out of 100, 90 times out of 100, 95 out of 100. You have to be right almost all the time. And it just doesn't work. And the problem is that you can be right 18 times out of 20, but one trade you lose a little on, but that other trade you lose half your money on. And now you have got to be right 10 times in a row to get all that back. Doesn't happen. It's a recipe for disaster because people's focus changes. When you are a winner, you act differently. When you're a loser, you act differently. You have emotions that go up and down. It's human behavior, and it is incredibly difficult to be steady every single time you do whatever you do. It just is. And whether it's sports or investing or life itself, being an option writer, you're kind of forcing yourself to be a disciplined trader, which for some of you is incredibly difficult to do. It's really hard. And you tell me this all the time about how difficult it has been to learn. It's one thing to learn how options work. The hard part is now executing on option trades, selling calls and buying them back for less money. And many of you have figured out your mistakes. You've been wise enough to know, yes, I now know what's wrong. I now know what I did incorrectly. I've got to make adjustments. And that's the best part about being an option writer. You can't lose it all on a trade. You can't go bankrupt on an option writing trade. Uh, you can see a stock go up and go higher than maybe what you'll get out of it, but you're not going to go broke. And chasing wild mother of all short squeeze pipe dreams, you can go broke. There are folks who have lost it all and are deep in debt to their bankers or friends and relatives and their credit cards and God knows what else. It's scary how many people were convinced to risk too much into a market that they shouldn't have been in the first place, or should have only been in 1/10 of the amount that they were, and now they're stuck with nothing but a sea of red. If, however, you used to have a pile of dough and you've got some still hanging around, you can become an option writer with very little money. You can be an option writer with $2,000, $3,000. You can be an option writer. You can start from there, learn one call at a time how this works, and just systematically build it up. And it's kind of like the Warren Buffett method. It's slow motion to richness. But boy, it's a lovely ride when it starts to kick in. And after 6 months of winning all the time, you change your attitude about investing, you change your attitude about life as well, and you quickly understand this is the way it's done. This is how I sleep at night. This is how I eat better. This is how I feel better. And this can actually work for me. And there are those who watch me who've lost hundreds of thousands of dollars in the market in the last 10 years. They've lost hundreds of thousands of dollars. Collectively speaking, it's just been a mess. And in the last 6 months, year and a half, we have folks here who are really bringing that dough back big time. And now they're to the point where they see that in the next 3, 6 months, a year, they're going to be ahead of where they were a decade ago. They are going to be way ahead, bringing the time back and bringing the asset value into your control and making it work for you. So again, I do the best I can with what I have. Thank you for being here. We have 7 minutes to go, and then we start trading. I sure hope that you have a great day today here. Thank you, Home Skillet, for being number 101, Drew, number 131, Willie, number 132, Moon, thumbs up, 134. Thank you for these thumbs ups, everybody. We're pushing for 200 thumbs ups. If that can happen, appreciate it. And this is the deal. Susan says, Bruce, so true. Writing covered calls is a different mindset from traditional thinking of stock investing. It truly is. It's kind of like almost like a George Costanza scenario, but it is a very conservative strategy that can really pay off handsomely to you. You have to allow it to happen, and you have to be willing to understand it, because this option business, this options market, is a multi-trillion-dollar business filled with some real sharks who know their stuff. But boy, is it also filled with minnows that are just clueless as to what is going on. And there are people entering the options market as gamblers who are going to lose a ton of money. There's no way to sugarcoat it. It's like a plane load of people going to Vegas every 15 minutes, every 10 minutes. Another plane load lands in Las Vegas 7 days a week. And most of those folks will leave poorer. They'll still have a good time, but they're going to lose money. And some are going to lose a lot of money. Some are going to lose a little bit of money. But Vegas shines in the desert like it does because the plane loads and car loads and bus loads of tourists keep coming in to gamble away and to lose money. And the options market is very much the same, although people think they have a better fighting chance with the markets. But these undereducated, non-aware players of the option market they fuel the upside for so many investment houses and pensions and mutual funds and savvy writers. And I'm trying to keep you from making mistakes. That's my number one objective. Don't have you make mistakes, and that way the wins are just wins. They're not wins to pay off mistakes. These wins are building your portfolio forward and making you richer and more comfortable. And if I can help you with your 401k, your IRAs, your retirement, to help you see the day where you're going to quit your day job or you're going to become a full-time asset manager, I am going to help you change your career from what it is you do now for a living to doing this, maintaining and growing your wealth as a living. This is your new job, your new gig. Boy, have I done my job. That is exciting. And again, I love hearing from you out there who've been able to make this happen and make this dream become a reality. Your lives have completely been altered going forward forever. And I'm just thrilled about this. Congratulations, those of you who are option writers now that never wrote an option before and who are writing multiples now and are beginning to really get it, really see the results coming your way. Deuce Caboose, thank you for number 140. Appreciate this. Thank you. And let's see if we can have yourselves a really good day. We are 3 minutes away from opening this market, guys. So Larry Titus is about to hit the bells for us. Thank you, Larry, again, if you're around for this. Those of you who have given us thumbs ups already, thank you. If you're able to hit the thumbs up button, nail it right now. Help us out. We need 200 thumbs ups every day to keep this channel growing. In my humble opinion, that's what we need. And we're at 144 right now. 56 thumbs ups are needed to get me to 200. If you can help out with a thumbs up, they're free to hand out. Please do so if you could. If you like the rants, thank you. You like making money in the market and you like getting richer, then hit the thumbs up button. If you don't like getting richer, hit the thumbs up button 3 times. Thank you all for being here. If you hate the show, hit the thumbs down button twice. Just nail it twice. Don't hit it just once, hit it twice. But if you like the show, please hit the thumbs up button for us. Thank you very much. 146 are in, and that is awesome stuff. 2 minutes to go, and let's get going here. We'll get this market started and see what it's all about. I'm showing a down dip of 329 points on the Dow, 39 or so on S&P, and 149 on NASDAQ. What else is going on here? We're up 63 cents on crude to 76.97 right now. And over in Europe today, the markets were off fractionally, a third of a point-ish, a quarter of a point over there. The US dollar had been rising lately. The euro is down from the 109 range a couple of weeks ago now to the 106 neighborhood, 106 and a half. The pound is at 121. That I think was as high as 124.25 a couple of weeks ago. Let me just double check here on the pound here. Last month, yeah, it was 124 range. Now 120.21 on the British pound. So it also is backing up a little bit here. And that's because interest rates are expected to go higher. The 10-year Treasury for the USA is now 3.91%, heading for 4% on the 10-year Treasury. We were sitting at 3.6, 3.5 a month ago. So this has gone up almost half a point. And this is affecting all other treasuries across the planet. They're all affected. So that's what's going on. We are open. I believe, yes, Larry Titus has done what Larry Titus does very well, and that is he's hit the bells for us to let us know these markets have engaged. Engage, says Captain Picard, and so the markets are up and running. We're down 305 at the moment on the Dow, which we were expecting, and we'll watch now for opening quotes and just see how things kind of come through here. Alberto says, Larry, thank you. Bama Babe, I cannot imagine my mornings without Uncle Bruce. Larry, T, DQ, Coyote, Bobby, Christina. Oh, just this whole bagel group. Thank you, Bama Babe. We love you. DQ, thank you, Larry. Bama Babe, Larry, thank you so much. Thank you guys. Just what can I say? JJ, I really hate this show. It's like a bad car wreck. I just can't look away. I'm just kidding, Uncle Bruce. I'm just kidding. Susan Shops, I love the rants. I just love the rant. Joe K, 151. Hello, Bagelers. Thank you, Joe K, for hitting the thumbs up button for me, popping us over 150 now. We got 153 in. We got 47 to go. Keep those thumbs ups coming, kids. Appreciate it. Getting us to 200. The Dow now down about 286. 23andMe is at 262 at the moment. Down, it looks like down a quarter. Now 257, down 30 cents. I'm wondering if they've been able to do their deal. Have they done their financing perchance? This is why are we getting this little dip and then we'll pop up again? I'm not sure. We'll find out as soon as we can on that. If anyone knows of anything on ME, let me know if you see any announcements anywhere. If you do any Google searching, just keep us posted on what you see on ME. We're down 30 cents right now, 257. GameStop down 39 at 21.60. Bed Bath & Beyond is down 1.8 cents right now, 179. ATIP up a tenth of a penny. Tesla is down 448 at 203.80. SoFi is down 16 cents at 646. Apple 218 on the negative side at 150.37. HBQ down 56 today to 29.60. Cyxtera down a dime. Google down 194 at 92.65. Moderna down 65 cents at 165.96. Cisco down 9 cents. Pfizer's off 47 now to 42.74. IBM down 67, 134.35. Microsoft 254.40 down 366. Rocket Lab down 8 cents. Matterport down 9. SmartRent down 7.5. Spire down a penny. Amazon down 2.18. Home Depot down 11.65. Netflix down $6. Vanik down 3.50. Adobe down 5.59. Goldman down 2.30. Boeing down 1.96. Facebook up 2.20. AMC, the commons are up 38. The preferreds are down 4.5. Royal Caribbean down 64 cents at 72.39. We've got Target down 3.63. JP Morgan down 1.13. Costco down $8.44, and Walmart down 3.22 at 1.43 a share. So that's a 2% drop and more on Walmart. And Costco now down about 1.5%, 1.75% in sympathy. Target down also about 2% here, down almost $4. NVIDIA down 122, Disney down 178, American Airlines down 24 cents. So it's a red morning. We were expecting that from the pre-market on. We'll see just how negative it's really going to be, how widespread. GameStop, 23andMe now at 259, 260 on ME. 23andMe down 27 cents at the moment. Coyote Bam and Babe agreed. Joe K, check email. I want to schedule a one-on-one this Sunday. Okay. Marcus, number 154. Mandu, SoFi is rolling out a no interest pay in 4 program. SoFi is so smart. Mandu, GameStop trying to follow AMC. It's crazy. We have ME, 23andMe, still at 260, down 27 cents at the moment. GameStop, 21.68, down 31 cents. We got Tesla down 183, SoFi down 16 cents. On ME at 258, the volume is 1.25 million this morning, which is higher than usual. I'm just curious whether or not ME has done any kind of a financing deal here that we've been waiting for. It's a $150 million financing deal they were working on. Has it been completed? Are they reporting this? Is this what's affecting the stock? I don't know. So if anyone has anything on it, do let me know. I don't see anything anywhere at the moment about it. I'm just taking a quick peek now over here. Let's take a peek under news releases. Nope, I have nothing under press release for the company. I don't see anything anywhere about it. We're just off 28.5 cents on a volume of 1.3 million. So was there a block that came in for sale and it was taken out, or is this the financing block being brought into the market? I do not know. If I had the answer, you'd have it too. And so there you go, kids. That's all I know about that. To quote Forrest Gump, that's all I can say about that. All right. Thank you, everybody, for popping in and joining us. 2168 on GameStop, down 31 cents, it would appear. We're watching everything do what it's doing. Tesla right now, 207, down a buck. Nothing serious on Tesla. It's down $1. The world is not coming to an end in the EV market today. So there you go. We have 159 thumbs ups. Thank you, everybody. We're only 41 away from hitting 200. Let's see. DQ says it's not a trading day without Bama Babe. You know, Bama Babe DQ, you are such a poet. Laughing out loud. How about that? All right, down 281 on the Dow. 259 on ME, down 28. GameStop down 25 cents at 21.74. Bed Bath Beyond down 4.1 cents. ATIP down 0.3 of a penny at 41 cents. Tesla 207.44 down just 87 cents. Tesla's coming back here. SoFi 650 down just 12. Apple down 211. HBQ down 63. Cyxtera down 12. Google down 170 at the moment. That's an early start. Everything is red over there. We're off 35 on the S&P, down 126 on NASDAQ, down 285 on the Dow. And we're down between 0.84 and 1.06% with the indexes at the moment. It's not a big sell-off. It's just a little dip to start. Will this gain momentum, or will it fizzle out and will we break even again? Or do we hang around a little bit and then drop from here? Will we have a down day? And if so, how much? I don't know. Juste d'une new 2140 on GameStop, it would appear. Make that 2179 on GameStop. It really would appear 2179, down 20 cents on GameStop. Even my big S iPad is behind the mark. It is not up to speed here. I'm showing a dip of 300 points on the Dow now, 307. All right. Okay, there it is. Fun times at the OK Corral. Everybody, welcome to the show. Great to have you here. What else is going on? A lot of overseas news today is what we're seeing. News out of Israel. Terrible news out of Israel. I think according to my friend over there, Beach Boy, he sent me a bunch of messages overnight, and a central banker quits in Israel. So that sounds like their Fed director has quit. The Bank of Israel raises interest rates by 0.5 percentage point overnight. So that's going on. There are issues. The shekel is at its lowest level since December 18. That is 15 years ago. This is the lowest level. No, it's 5 years ago. I'm sorry. 5 years ago, the lowest level for the Israeli shekel. Unbelievable. There's just all kinds of issues over there that are going negatively for the economy, and it's this crisis they have. This right wing. I don't know what to call it. No, I don't want to upset anybody here, but it's impossible not to upset people when I talk about this sort of stuff. But there's this coalition between Netanyahu, who's trying to hang on as prime minister for the sixth time now. He's had to align himself with minority parties, because in Israel there are probably 10 different political parties. No one party has a majority. It's a minority government all the time. So it's a question of coalitions. Left-leaning politicians can't seem to get together to make a majority. The right-leaning and Netanyahu seem to, at the moment, have a deal in place to share power. And it means that Netanyahu has to give certain concessions to the right wing of the political spectrum, and it is upsetting a lot of average Israelis. And so there's protests in the streets. and it's not good economically, and this is not working out very well, and there are a plethora of issues being discussed over there. But it is not making the U.S. national news so much. It is not dominating European news so much, because this is truly a country that is a democracy surrounded by countries that are not democracies. And so the neighbors of Israel are not going to highlight this because it does serves them no good whatsoever. There's no need to rile up Jordanians and folks in Lebanon and folks in Egypt and whatever, because they do not have a democracy where they can go marching in the streets without police beating the holy hell out of them. And they're not going to show the plus side of being a democracy, but they'll highlight the bad side about democracy. Turmoil in Israel, they'll highlight that, but they're not going to highlight the other side of it. And so Israelis are in an island unto themselves politically, and it is what it is. Does this affect business elsewhere? Some people say yes, some people say no. The Israeli economy is a powerful economy for the size of the country, but in the global scheme of things, Israel is not a G10 country. It's not of that ilk. It doesn't have 50 million people, 10 times the amount of land, and all that kind of. This is a unique place on the planet, and it is an ally of Canada's and America's and so on. And so we watch from over here going, I sure hope they can figure this out, because they're on their own. They have to figure it out themselves. And I just wish my friends from Israel the best. I do not know what to say to make it better, because there's nothing I can do to make it better. I can only observe and go from there. So that's all I can do. There it is. All righty. Thank you all for being here. Nice to see you all. We're down 273 on the Dow Jones. We're down 31 in S&P. We're down 106 on NASDAQ. Heard this morning that some leader of ISIS, some guy who's supposedly the senior ISIS official, was wiped out, probably by a drone strike. You want that job? Next applicant, please. This seems to happen every 3 to 6 months or so. Another one of these guys gets picked off, and it's not making any serious news that I can tell. But I did catch just a quick headline about it. That's all I got there. Yeah, Bruce Splair. What's with the train accident with the chemicals for plastic production that took place in Ohio at the border to Pennsylvania? I don't know the details. This is a regional tragic story locally there. It is not a national stop the presses kind of story across all of America. It is a highly regional story, very emotional for those involved, of course. There is a federal overhang to the story because the train companies, the railroads, they report to the federal government. The safety issues are a federal thing because rail lines are interstate. They don't have just state railroads. They're interstate railroads. So the federal government's involved to keep a level playing field for railway safety everywhere. But with thousands and thousands of trains and millions of cars being pulled all the time, you're going to have mishaps on rail lines. I mean, this is just unavoidable unless you spend 10 times the amount of money on safety, which is just not in the cards. It is near impossible to pass a bill in Congress and the Senate to force railroads to spend more on safety than they already are, because the lobbyists are there to protect that industry, and they want someone else to pay for the safety. Well, if you're a railroad and you're the one making the dough to move product along rail lines, you should be the entity that pays the price for safety upgrades. The federal government, though, it tries to maintain some sort of semblance of safety, but it is an uphill battle. And every once in a while, we hear about these nightmarish accidents. They happen in Canada, they happen in America, they happen in Mexico, they happen globally. It's not. This is not a America only problem, but once in a while we hear about a doozy that affects people in cities and towns. So far, we've not had to talk about a derailment of toxic chemicals in the middle of a huge population area. That has not yet occurred. I'm just waiting for the day it will. It's only a matter of time that there could be someday a terrible tragedy. But then again, the transportation system is what it is. It was created 150 years ago. And rail lines are rail lines wherever they are. They were there first. People built around rail lines after. And here we are. Certain cities have corridors, certain states have safety corridors for certain chemicals, but others have nothing. It's wide open. And we're subject to scary stories from time to time like this one. I have nothing more about it that I can tell you. I got nothing. It's tragic. That's all there is to it. Anyway, this is, again, some people are going to be really upset about it. And again, I don't know enough about it. So there are going to be people who are upset with me because I'm not, talking about it. I just am not familiar with it because it hasn't, it's thousands of miles from where I am physically. It doesn't have anything to do with the investment business that I'm covering here. And so I'm not the messenger for this story. I'm just not. So you're on your own to figure out what's going on, but there's plenty of sources of information about this tragedy. And so I leave it to all of you to figure it out. There you are. We're down 350 on the Dow. That I will cover. But we're down 350 on the Dow. We're down 37 on S&P, 117 on NASDAQ. So we've had a second wave of selling come in. Interestingly, though, the Dow now is the worst performing index. It's down 1.06% when NASDAQ is not the leader anymore. It was the worst performer. Now the Dow is the worst performer. This is interesting. Now, keep in mind, the Home Depot company and Walmart are both 30 Dow component stocks. So their underperformance right now will affect the Dow Jones dramatically. Not so much NASDAQ, not so much S&P 500, but these two are two of the Dow 30 stocks. And so you've got to keep that in mind with this story, okay? See if I can get this to work here. We're down 386 now on the Dow, 386. The worst performers for the market. Let me just see if I can I get this to work? Yes. The worst performers would be Home Depot down 5%, Disney down 2%, Intel about 2%, 3M Company 1.75%, Nike down 1.6%, Boeing down 1.4%, Verizon Communications is down 1.4%, Walgreens Boots Alliance is down 1.37%, Microsoft down 1.36%, Walmart down 1.25%. Now, Walmart is down 181 a share, but it is not the worst. It's in the worst 10 of 30. Yeah, it's in the bottom 10. The best performing Dow stocks are all down as well. Percentage-wise, the worst 12 performers are 1% or less off in price. They're not like, terribly bad. But Merck 0.17, Amgen down 0.25 point, Chevron down 0.25, Procter & Gamble down 0.44%, Coca-Cola down about 0.5 percentage point, Cisco 0.6%, McDonald's down 2/3 point, Honeywell down 2/3, Goldman down 0.75, United Health down 0.75%, Travelers down 0.75%, Visa 0.75%. Caterpillar 0.8, American Express 0.84, Johnson Johnson 0.91, Dow down 0.98. After that, they're 1% or worse off. There's the story of the Dow Jones right now. We're down 386, it would appear, right now. Yep, and that's 1.14%, and NASDAQ is now tied it again at 1.14. This is not a massive sell. This is not a massive 5% drop in one day kind of story. If we had that, we would be off 2,000 points, 1,800 points. We're down 385 on a 33,400 index. So yeah, it's a tough 1.1. It could go down 500-600 points today. Yeah, we could do that. End of the world? No, just correction, little profit taking, realignment, whatever you want, whatever you word you want to use on it. At 4.05% now, 405 points. Pardon me, 405 point drop on the Dow, which is 1.2%. Okay. What else? Manager, I am thumbs up 166. What's BP is saying, the problem with GameStop at the moment is that you have to go out to July to get a $350 call premium on a $23 strike, or August for $350 for a $25 strike. Deals. Well, a $25 strike is $380 out of the money. That is 15% out of the money and more. So yeah, you better go that far out to get that kind of a percent. Why don't you take a look at Apple contracts for August and add 15% to the price of Apple stock right now. Was it at 150? Add 2250 to the price of Apple. That's 15% more. And take a look at 172.50 contracts or 175 contracts for August and see if you get the same percentage return. I don't think you will. I don't think so. Same thing with these 23s for GameStop. Okay, they're $1.70 out, so that's what is that, 8%? But add $12 to the price of Apple and take a look at 162 Apples and see what those contracts are going for, or do the same thing with Pfizer or Cisco. I don't know if you'll still find GameStop being pretty healthy there. Decay is then very slow, so we're not able to get the $1-2 drop rewrite twice a month yet. BP is looking for monthly depreciation. I hear you loud and clear, but keep in mind that you're looking to write a call for a nice high premium if you can find it, and then within a month or so you're looking to buy it back. Now, if it takes 6 weeks, 7 weeks to do a rollover for a nice profit, you still have to annualize that overall. You have to be, you cannot go 30-day segments and say this must perform in 30 days or it's not working. You can't play that game. You have to be able to be flexible with this market. Manager, Uncle Bruce, I had shorted Pfizer at 42.75 a few weeks ago, and since then it never came down until today. It's trading in that range. Should I cover it and stay away or wait for more downside? Well, you're asking me to help you guess. That's what you're doing. You're guessing what's going to happen. And it's trading at 7.8 times earnings. You're asking me to guess, and I can't guess. I can only just go with the stock. That's all I can do. Manager, you are notorious for shorting. I know that, but when you short a stock near its low of the year, what do you expect is going to happen? Why do you expect it to continue to want to drop? It's not a 40 times earning company. 41.45 is the low of the year. We're at 42. What is it now? 42.70. You're trying to wring the last drop of water out of a dry towel. I just don't see Pfizer going to $20 a share, or $30 a share, or $35 a share. I don't see it. I don't know where you're seeing it, if that's what you're seeing, but you're betting wrong. I'm glad to see where it is for you, that at least, you're back to kind of where you're at. But I don't know how you're going to make $2 profit from here. There's something catastrophically bad that has to happen for that to happen. I just don't see something that bad on the horizon. You're gambling. You're not You're not doing it rationally, in my opinion. You are gambling at the low of the year, and I think that's the wrong way to go. And you've got a lot of money on the line. I don't think that's the right way to play it. Splair, I think actually it's helpful to write into strength on GameStop. The last week, for example, was great for into money calls with good premiums in July. Coyote, BP, the bigger issue has been that GameStop has been a bit stagnant in this 2021 range. Manager, it's 42.70. I'll get out and short something else. Well, yeah, you got to short something that's shortable, that is overpriced, overcooked. And right now, you may want to wait because the market's down 400 points. You may want to just sit back and go, well, let's see where there's a recovery on a stock or an overheating going on rather than short at the low of the day. Because I don't know if 400 points is the low of the day here, but it might be. We're only 26 minutes into the market and we haven't seen this market's daily range yet, not even close. And if you're trying to short something right now, you are gambling again. And I don't know if that's what you should be doing. You should be very meticulous in your moves with the amount of money you're playing with. But that's me. I'm just an old guy with no hair. Whatever I got, it's white. I'm just saying, I'm just, homeless Canadian here. What can I say? I love you, manager. You know it. We're down 412 on the Dow Jones here. 44-point drop on S&P. Nasdaq down 150. 1.28 on Nasdaq. It's leading the downside again. The Dow now 1.19 lower. S&P down 104 in percentage points lower. All right. That's the deal. Oil up 73 cents to 77.07 right now. Thank you all for joining this guy, hanging out with me. Keep your eye on your options. We're down 75 cents on GameStop. Let the stock tell you what it wants to do and go with the flow. And if you are noticing, like if you've written GameStop calls in the last week and you were able to catch that 22 range or whatever the high was last week, and you wrote 21s, 22s, 23s, 24, right now, fold your arms. Just fold your arms because you're not here for a 10% flip. You're not here to sell a call for $4.50 and buy it for $4. That's not what you're here for. You're here to sell a call for $4.50 and buy it back for less than $2. You're now waiting. You're being paid handsomely to wait. Those of you who've written 50 calls on GameStop, if the shares of the calls have backed off 20, 30, 40 cents, you're making money. Let it continue to come your way, especially if you're sitting on out of the money calls. If you've written 22s and 24s and 25s, and we're at 21, 26, you need to do nothing. Absolutely nothing. The stock's got to go down to 19, 18 for you to care. Because at that point, you might actually be up 40, 50, 60% on your trade. Now you care. But here with this slight move of 75 cents, which is nice. Is this the mother of all moves on GameStop? No, but it's a move in the right direction if you're an option writer. You let it happen and you let depreciation come into your contracts and sit in a very comfortable position and just say, okay, bring it back. Another day will pass and I'm getting richer. There's the attitude right there. Let's see what else is going on here. Susan shops about. It helps with most stocks to take a look at the charts. I set indicators, 10-day moving average, 50-day moving average, 200 moving average, also support resistance. Then I look at RSI and volume. GameStop is trading in a range for sure. You need patience. For some folks, this is the way to do it. For others, it's just, hey, man, I wrote a $24 call and the stock's at 21.28 and I'm up 30% of my call. I'm not buying it back until I'm up 60%. That's it. That's the attitude, and there's nothing wrong with that either. Manager, I know I made a mistake, but I got it without a problem. I did make a small problem. Right on. And I'm happy for you. I really am. I'm not complaining here. BP, yes, I bought a $23 July strike for $3.35 33 days ago, and it is still around this area. JJ, if you're going to be short, be smart about it, says JJ. There you go. Yeah, I have a tough time supporting someone when they say, I just shorted stock at the all-time low. I'm just going, no, What are you doing? You short at the all-time high. You short when something's overcooked. You short when the market is about to go lower, not when we're 443 points lower already. That's wrong timing. Wrong time. And if you're shorting because you need a trade, then you are in trouble. You're a gambler, and that means you have a gambling problem. You really want to be an investor, not a gambler here. But I get it. Okay, ME is still 253. I was asking anyone if you've seen anything on ME. Let me know. We're still at 253, down 34 cents. The low of the day, 249. The volume, 1.96 million. That's all I have. I don't see any news on 23andMe. If anyone has anything, let me know. Why is it down 34.5 cents? I am guessing, personal guess, 250 is the price for the $150 million financing. That's my guess. They're going to do a block trade of 60 million shares at 250, raise the 150 million, let the stock do what it wants. That's my guess. Anybody else have anything better than that? Let me know. GameStop, 21.32, down 67. Bed Bath Beyond down 11 cents. ATIP down 1 penny. Tesla down 248 at 205.40. SoFi down 23, 6.39 a share. Apple 150.52, down $2. HPQ down 51 cents at 29.65. Sextera down 11. Google down 145. Moderna down 254. Cisco down 33. Pfizer down 54. IBM down 193. Microsoft down 404. Rocket Lab down 11. Matterport down 11 cents. SmartRent down 8. Spire down a penny. We have results coming up soon for some of our favorite guys, former SPACs. This is the 21st of February, the 24th of February, 3 days from now, ATIP talks. Financials are expected on ATIP on the 24th. On the 28th, a week from today, next Tuesday, Rocket Lab speaks. Matterport speaks tomorrow. Matterport tomorrow, the 22nd. And March the 8th, SmartRent is going to talk. So we have got 4 companies coming up with news in the next couple of weeks. So stand by. We'll see what has to be, what's going to be said, and just where we're at. Okay. Thank you, everybody. What else is going on here? Okay, Coyote. I only short something when it has an insane run. I am extremely selective because I'm not in the mood for getting burned. Option nomads, as a long-time Pfizer follower, I'm careful with positions I write on. Pfizer at 41.44. When it makes its move up, it can do so quickly, and I hate writing where it's been in the last 3-4 weeks. Manager, I had shorted because of the news. BP, I am folding my arms and looking for a $2 gain. So buyback at 165, but it has been 33 days so far. Bama Babe, manager, what news? Bama Financial Mischief, Uncle Bruce, I have an update on the $1 SoFi calls that I had written a while back. If you recall, I sold them for $7.01, and I've been slowly buying them back. 3 more this morning for a $2.82 profit, and I have a stink bid in for 2 more. If those hit, I will have bought back 11 of them so far. Very interesting. That's another $312 profit. They just hit, by the way. So way to go, Financial Mischief, making money on this trade. Coyote, BPCY, are you profitable all on it so far? I mean, could maybe buy it back and rewrite a lower strike, come in and time, up to you. Waiting is also fine. Bama Babe, my $21 GameStop is still in the money. I'm crossing my arms. I'm not doing anything. This thing has to drop. 21.25 is the stock, down 74. Bama Babe is waiting. BP was buyback at 135 for a $2 gain. Manager, there was news on Pfizer which said they are going to lose COVID revenue. Yeah, that was expected. Yeah. Anyone had written covered calls on SoFi. I had rolled over 6s to 750s a few weeks ago. There you go. Giddy up, everybody. The market right now, Dow off 426, 1.28%. S&P down 1.2%. It's off 48. NASDAQ down 1.5%, 174, 175 loss on the NASDAQ. So the markets are lower, all three of them, very close to each other. 1.2, 1.3, 1.5, all in percentage points. Okay. Coyote BP. Also keep in mind, I've been writing on GameStop for 2 years. And this January, February started to 2023 has been extremely dry. Stock ran up from 16.22 and now it's just sitting here again. BP, Coyote down $67 so far, no profit. So folding my arms. Coyote manager 7.5s are good. Out of the money a good bit right now. SoFi is at 637, down 25 cents this morning. ME down 32 cents at 254. Okay. GameStop down 84 cents at 21.15. Okay. Tesla down 329, SoFi down 25. Okay, everybody, welcome to the club. HPQ down 54 here, Cyxtera down 11, Google down 146, Moderna 164.73, down 187 a share, Cisco down 35, Pfizer down 42 at 42.79, IBM down 211 today to 132.91. If you bought Apple at 132.91 right now, the dividend yield you will get 4.89%. So that is a very good yield for a 132.84 pickup. The question is, can you buy the stock at 132.84, enjoy the yield, and write maybe 135 calls to $140 calls for 5 months out, 4 months out, 6 months out, and get in a nice 4% more, 5% more? Can you make maybe 10% in 10% in option premium yield a year, 10% plus the 5%, let's say, stock yield for dividends? That's 15% a year on your money for holding IBM. Now, theoretically, if you're writing 135s, 140s on IBM, and the shares do reach that 135.40 level, you'll do rollovers to move up into 145s going forward. And you will keep bringing more cash in, raising your strike price, growing capital value on your stock, of course, but also still enjoying a nice premium from your dividend and from option writing. Theoretically, you might pull in 12 to 15% option premiums a year and 5% yield. You're hauling in almost 20% on your IBM. Very conservative stock, perfect for retirement accounts. Those of you out there who are terrified to play the options market as a writer, you might consider, well, why don't I buy IBM stock at 132.74 and write 135s or 137s or 140s on the stock out several months and take the premium in cash in my retirement account and enjoy the premium dividends income. And then in 3-6 months, if these die worthless or they're down to a quarter or 50 cents each, buy them back for 40, 50 cents and then write 3-4 months out again, depending on where the stock is, $3, $4, $5, $7 a share higher than the stock. Stay well ahead of the stock. Very conservative writing option program that if it can generate to you a 20% return in your IRA, in your IRA or your 401k, whatever instrument you're using, RRSPs in Canada, of course, depending on what you have wherever you are. Again, I'm not just zeroing in on Americans only. It depends on where you are on the planet. What are your retirement options? Can you bring in 20% yield to you from an IBM portfolio on a consistent basis? This will grow retirement plans dramatically because you're going to earn 20% compounded going forward. That's what you're after here, right? Right? I would say, let's take a look at June calls. I don't even know what they're going for. June IBMs, 135s, you can probably get 570 for those. 140s, you can get about 340 for those. So $3.40 a share, $3.40 a share for a June contract That is out of the money, 750. That's pretty good money. That's 2% on your dough between now and June, 4 or 5 months, 4 months. You can do it 3 times a year, plus your dividend. There's teens of return, 13, 15, 17%. Thank you very much. Nothing wrong with that trade. July contracts, can they bring you more? 140s will bring you 450 for July's. A little extra cash. You want to write out to January 2024? You want to go that far? Be really conservative and just not have to worry about the day trading and all that. January 2024, 140s, 820. That's what they're bringing in. So bring in 810 on a call to stock that costs you 132 to buy, and between now and next January, receive 3 or 4 dividends. So there's 5% dividend yield, roughly, and then this $8 haul for a 132 stock, that's 5-6%. There's 11-12%. Really conservatively going forward. Now, if the shares want to go to 140 by next January and the contracts are worth 50 cents a piece, you clear 750 on that. You buy them back for 50 cents, right? January 2025s, haul in another $8, but now you're writing 145s, 147.50s, maybe 150s, and you'll haul in $7-8 again at a higher strike. Thank you. If the company improves their dividend yield, thank you. There's that too. Again, this is just really conservative trades that are anyone can do without worrying yourself to death about this. And this can be done with RRSPs in Canada, with retirement plans in the US to enhance your retirement. If you can, instead of making 5% return on your dividend yield, and maybe the stock goes up 3-4%, maybe you can have your stock go up 3-4%, you get 5% yield on your dividend, and you make 8, 6, 7, 8, 9, 10% yield on your options every 6 months or something like that. That's pushing 20% a year on your retirement fund. You're 58. It's worth, you have enough money to buy, I don't know, can you buy 1,000 shares? You have $132,000. You can write 10 of these things. Can you make 20% on $132,000? That's 26 grand. Can you make 20% on 160 next year? That's $32,000. And you're adding still to it, don't forget. You'll quickly break 200,000 in value in a couple of years. You'll then quickly break 300,000 in value in like 5 or 6 years. You're 63, 64. You've still got a few more years to go. You're going to get to that 3, 4, 500,000 level instead of where you are now, 132. I mean, and then the question is, well, okay, I've got this retirement plan. I'm going to keep writing options on it while I'm withdrawing from it. But what I'm withdrawing from it is less than what I'm making in my option premium and my dividend premium. And so my retirement account is actually growing while I'm withdrawing from it. That is the ultimate scenario to be in as a retiree. Can we get you? You may want to do a one-on-one call with me to talk about that. Just saying. Okay. What do you want to do with the rest of your life? I want to write. There you go, everybody. Thank you so much for being here. These thumbs up counts, how are we doing on thumbs ups? 175. Are there 25 thumbs ups available from the 222 of you watching right now? I sure hope so. Help me out and nail that sucker for us, please. Hit the thumbs up button, please. GameStop has their earnings in 3 weeks. There you go. Let's see what else is going on. H. Gregory, I had a covered call on TQQQ that expired in the money on Feb 17. The strike price is 24. The stock closed at 24.04. Yeah. H. Gregory, why was my stock not called away at 24? It could well be that the fees that the person would have to have paid to exercise the contract wasn't worth it, and they gave the nickel to you. They gave you the 4 cents. Said to hell with it. That's what it is. That I don't know. There it is. It could be a broker issue. It could be just the fees, or just $10 a contract to exercise, and there's only 4 cents of value. Forget it. Karen, I have GameStop 20s and 21s. Still folding my arms, Uncle Bruce. This is getting old, but I have to just keep waiting. I'm just sitting here, and I'm not moving. We're down 500 on the Dow. We're at 2116, 82 cents lower on GameStop because we're going lower. Why buy these back right now? No need. Let the stock drop further. Absolutely right. The market wants to drop. Stock's dropping. Sit tight. Cross your arms. Wait. There you go. Gowdy, no need to call them at all. Just say thank you and write another call immediately. Write calls today against that position and bring in more money. Maria, I encourage you to do one-on-one. Thank you, Uncle B. Oh, Maria and I had a good time this weekend. That was really great. Love my one-on-ones. We cover a lot of ground on those one-on-ones. Fantastic. DQ, Cisco is testing $50. I don't know if this is a headline to worry about, but we're at 50.03 down 74. So it's true. We're testing $50. There you go. I don't know if this is headline news or not, but there it is. Okay. We'll see what's going on here. Home sales are slowing to the weakest rate since 2010. This headline just came out on Barron's. Home sales slow to the lowest level since 2010. You know what that was? That was the recovery from the big meltdown, the economic crisis of 08, 09. In 2010, we still weren't coming back like with a vengeance. This is telling today we're back to those levels. Something to think about. U.S. existing home sales fell 0.7% in January to 4 million units, lowest in a decade. Breaking headline coming out. There you are. Okay. Anyway, okay, sounds good. So it's H. Gregory. This has never happened to me before. To have an option close in the money and they didn't exercise me. So I was confused. Thank you, Uncle B and Coyote. Yeah, don't worry about it. Write a new option today. Bring in money. Bring in cash. Write a call for a fat premium going forward and keep it going. Let's make more money. Thank you very much. This is what you live for, that these calls reach the strike price, but that's it. And you keep all the money, and now you're right again. Let's go. Yeah. Anyway, DQ. Yeah, I'm surprised it didn't auto-assign, but it all depends. Sometimes they do, and sometimes they don't. I can tell you if you were $1 in the money, it would have gone. But a couple of pennies in, maybe not. But some outfits, 1 penny in, done. You're going. It's all depending on the platform. You have to just go with the flow. Okay. Very interesting, everybody. We are down 485 on the Dow. We're down 31 cents on ME at 256 a share. Volume of 1.95 million, now 2.1 million. 2.1 million on ME at 256, down 31. Low of the day, 249. I do not see a 60 million share transaction on the floor to do the $150 million financing. I'm wondering if that was done off the floor, which would make sense to me. With the stock having touched 249, they could have done the 250 deal, raised 150 million to the treasury of 23andMe, and now they can announce that news. I don't see an announcement. I don't know if that deal's been done. If anyone knows about it, let me in on it. I'd love to hear. Okay. Coyote, yeah, this is true. This is a dream come true scenario. Laughing out loud with these exercising of options at the money. Maybe TD just didn't feel like it. 3-day weekend, could be bothered. Yeah, maybe it'll get done tonight, this morning. I don't know. Maybe there's an extra day settlement and it'll happen now. I don't know. What does it matter? It doesn't really matter, does it? We'll see. If you can write a new call now, then it doesn't matter. If you can't write a new call, then they haven't done their bookkeeping properly, and they're going to have to update you in your account that yes, you were assigned, but I don't know. Okay. But this, I didn't feel like it. No, that's not a good excuse. No, that's not good. Good morning, says Smokey. I'm 186 on the thumbs up meter, Bruce. You're only 14 away from 200. Thank you, all of you who are coming through for me with these thumbs ups. 187 now, 13 away from 200. You guys are coming together for me on this. Thank you. Please keep these thumbs ups coming in. Get me to 200 thumbs ups. It's what we strive for every morning. Fantastic. Good stuff. If you're interested in a one-on-one session with me this weekend, let me know, folks. Send me an email to my email address. It should be right there. There it is right there, bruceforman@hotmail.com. Get a hold of me with an email to that address if you can. Some of you send me emails to my email address on my website, which is different, and I don't pick them up as quickly as I do these. So just bear with me. After I get off the air, I usually try to catch up on everything, and we'll see if we can get you set up. Okay. Thank you all for getting a hold of me for those. Manager says, I had written Amazon March 3 $99 cash secured put for 216. My average cost base is 96.84. Now it's trading at 95. Should I roll down or wait? What should I do? Well, if you roll down, you might go forward to April and see if you can roll down to 96s or 94s or 93s. I mean, can you roll down for as much as it'll cost you to buy these back? Because what you receive, 216, you're going to have to cough up money now to buy these back to not be on the hook to buy. But you could rewrite maybe into April or May or June for more money. You can always play that game if you want to on the Amazon puts. Coyote, make it their problem, not yours. FM, I'm writing another TQQQQ. There you go. There you go. Write, and be writing. Exactly. All righty, everybody. Welcome to the party, everybody. It's nice to see you here this morning. We're down 334 on Tesla. GameStop is 21.18 right now, down 81 cents on the session. The low of the day, 21.12 for GameStop today. That's what we're showing right now. U.S. existing home sales have fallen every month in the past year, new data shows. That is the deal right there. And that is not letting up. It continues on. Higher rates are expected in the next 2 months. This is not good for housing. This will continue to affect housing. The other thing that's going to affect housing, for example, here where I am, this is the end of February coming up. March and April, the high season is over for Southern California real estate, Arizona real estate, a lot of Florida real estate. It ends. The hot winter market is over. We snowbirds leave. And so a lot of properties are vacant here in May, June, July, same everywhere else in southern states that are owned by northerners or owned locally but only rented out. And that's when condos come up for sale. A lot of houses in the Sunbelt come up for sale in the summer because the renters are gone. All that big rent money has been collected by the owners, and now they want to get out. That puts more pressure on real estate. More real estate will be for sale. And of course, in northern USA and in Canada, the real estate market picks up in May, June, July. That's when listings show up. Nice weather, people put their houses for sale. They'd rather move to another house in the summer, not in the winter. Can you imagine why? So they absolutely do expect many more listings to hit the markets in the next 3 to 6 months. And that'll put more pressure on prices to be even lower with these higher rates to add on to the misery that is coming. I think so. Anyway, there it is. Okay. What can I say? We now have thumbs ups of 191. We're only 9 away from 200. Thank you all for coming through for me as you do every single show. Thank you very much. 466, 467 down dip on the Dow right now. We're coming into the first hour of the day down 460, 470. We've been down 500 already. 1.46% drop on the Dow, 1.35% on S&P, and 1.64 on NASDAQ. Down markets. Oil down is up 16 cents, but it's falling. Oil is only up 16 cents now. It was up $1.50 this morning. 76.50. Oil dropping as we watch this market as well. Oh boy. Yeah, the market is definitely lower, no question about it. Maria, you got the right idea there. We have 193 thumbs ups, and with us only 7 away. Now 196 thumbs ups, only 4 away. You know what time it is? It's time for knee emojis. It's time for a knee emoji attack. Thank you. Appreciate it very much. Deuce Caboose, I wrote a call. The stock dropped, bought it back for 50% of the cost, used the difference to buy more shares. I think I'm starting to get this. Obama Babe, thank you for the knee emojis, and way to go, Deuce Caboose. John Anderson, neat. Yes, Spicy Android, Untamed Viking, neat. Here come the knee emoji attack right there. Here it is. Maria's on it. Thumbs ups and knee emojis. 197 thumbs ups. Sell my house fast enough on Marlboro. Neat. Here come the knee emojis. All over the world are starting to show up on this chat page here. JR, Oscar Davila, thank you for these neat emojis. Here they are, one after the other. The attack is underway. Stocks will do whatever you want them to do once you pop these babies up. BP, neat. The big E is here. Neat. Yes, indeed. Here come the neat emojis. Don't get in the way of the knee emoji attack. You will be run over, and that would be a true crying shame. We're down 470 on the Dow. ME 254 down 32 cents. Volume 2.2 million officially. Unofficially, I'd love to know. GameStop 2110 down 89. We got ATIP down to 37 cents. The bargain is there. Tesla 204 down $4. SoFi 637 down a quarter. Merco, Zeta State, TJ, neat. Here they come. Deep value investing, knee emoji time. Here it is. DH Ruta, neat. That's right, kids. Don't get in the way of the knee emojis. The Knights of Knee will take you out. You don't want to mess with these guys. They're tall. They're dark. They're mysterious. I wouldn't get in the way of these guys. There you have it. Thank you, everybody. 199 thumbs ups. We need one more for 200. Thank you all for getting me to 200 thumbs ups. We're down 483 on the Dow, 493 on the Dow. Now we're down. We're down 55 on S&P. We're down 193 on NASDAQ. Lower we go. The 2-year Treasury yield near the highest since 2007 amid Fed risk funds rate heading towards 6%. Worries, interest rate worries are out there. The 10% yield, 3.92%. The UK, 3.59%. Germany, 2.5%. Japan used to be negative just 6 months ago. It's now positive 0.5 percentage point. The Japanese rates are rising as well, even there. European markets are down 0.4%, 0.5%, more or less. The U.S. market down 1.5 to 1.75 percentage points. We're down 200 on the NASDAQ. Oil is red, negative 5 cents on oil in Texas now. 76.29. Oil is going lower now. It was up $1.50 this morning. Why is it that the bargoons show up when I'm out of powder, says BP? I got to wait to payday here. Oh, my gosh. We're at 486 on the down dip for the Dow. ME 254. GameStop 2105. I think these are the lows of the day now being approached here. Yep, 2101, 2104. We're at the low of the day on GameStop right now. Volume today on GameStop, oh my gosh, 770,000. I mean, we are talking dead quiet. 185,000 pre-split. This is nothing. This is not good. Very quiet. ATIP 38 now, coming back a penny, still down 3.2 cents. Tesla 204.20 down 4.11. SoFi down 26. Apple down 2.88. HPQ 29.34 down 82 cents. Cyxtera down 15. Google down 173. Moderna 163.90 down 271. Cisco down 96 cents to 49.81. It went right through 50 like a hot knife through soft butter. There you go. Pfizer down 35, IBM down 210, Microsoft down 460, Rocket Lab down 20 cents, Matterport down 19, SmartRent down 15, Spire down 1.5, Amazon down 249, Home Depot down 1682 at 301. Netflix down $7, $340. Vanik down 428, Adobe down 680. Goldman down 660, Boeing down 470, Meta up 180, AMC up 34, but the prefs are down 6.5. Royal Caribbean down 139, Carvana down 64, Robinhood down 41, BlackBerry down 15, Norwegian down 64, Carnival down 21, Target down 470, JP Morgan down 220, Costco down $9, Walmart down is up 63 cents. Walmart has had the turnaround from a low of 142 to 147, and the Dow is still down on the session 485 points. This Dow stock did not turn the Dow around on its own. Interesting move there. We'll see if that lasts, because Walmart is indicating a price earnings multiple of 45 times. That's not good. That's not sustainable. Disney down $3, 102 again on Disney. We've backed off on Disney now from a high of 115-ish to 102 in less than a week. Feb 9 to Feb 21. Well, in 2 weeks, we've backed off. So down goes Disney again. NVIDIA down $4, 209. And American Airlines down 58 cents to 15.80. We were in the 17s just a little while ago. 17.20 on Feb 8. That's 13 days, 2 weeks from 17.20 to 15.80 on American Airlines. That's called oops. That's what that's called. Down we go. American Airlines. They might be making money, but they're trading at 83 times earnings. Yeah, a little high. There you go. Well, we'll follow all that, won't we? Interesting. 488 drop on the Dow Jones right now as we speak. Okay, there it is. That's the latest. We're down 56 on the S&P. We're down 202 on NASDAQ. We have now thumbs up numbers of 203. Thank you very much. This is great. Splair saying, no, who said this? JJ, I wrote ME Jan 2025 $3 cash secured put for, what was it, 105, 125 bid ask. I filled at 120. So they paid me $1.20 to do the ME right. And JJ now is on the hook to buy the stock for $1.80. It's a 256, so not a bad move there. Take the money and keep moving. Stink bits save lives. Just in case, Splair, you all have a relaxed day out there. Thank you, Splair, very much, my friend, for all of that. We're approaching the 2-hour mark of our show today. We have hit 200 thumbs ups finally. Thank you, everybody, for helping out, getting us to the promised land here. We do appreciate it. We are down 450 on the Dow, 53 on S&P, 190 on NASDAQ. That is the story here live from Palm Desert, California. That's what we got going on. We're watching this market quite closely and seeing a lot of red here, spread everywhere, and some are doing better than others, it would appear. 21.18 on GameStop with the low today of about 21.01. Looks like, yep, that was the low, 21.01, and we're at 21.15, 16, 17 now on GameStop. ATIP looks like it's coming back to 39. It got down to 37 cents here on the session and is now at 38.9 cents. 250,000 traded, looks like, on ATIP. So a sell wave came in and a buy wave has followed. We're down 2.4 cents on ATIP, but a 2-cent recovery so far, just in the last 10 minutes. It's interesting. Tesla 205, 27 down 304. SoFi 642 down 20 cents. There you go. Join me today at 3 o'clock Eastern time today for the final hour of trading. We'll be here for the last hour today. Ask me questions about what's going on. If you have any questions in the meantime, let me know. If you want to have, you want to send me an email, private email, do so. If any of you want to have a one-on-one session this Sunday, let me know. There is one spot already booked, however. If I'm not mistaken, am I not mistaken? I'm not mistaken. The 26th, we do have the 2:00 Eastern time slot already booked. We only have 9 in the morning, 12 at noon available Eastern time this Sunday for one-on-ones. That's the story as I see it. Thank you all for joining me this morning, for the fun and merriment of Tuesday. Welcome back from the long weekend, you guys, and get yourselves a nibble and charge yourselves up. John Anderson, thank you, my friend, for being here as always. Come and join me this afternoon, and let's close this market together and see what we have, and see where things kind of end up here on the day as we wait for the final trades to go through this afternoon from 3 until 4 o'clock, the last hour of the day. Thank you all for your kind support, kind words, for being here as members of this channel, as lurkers, as subscribers. Thank you all for your support, thumbs ups, and everything else. We are now at 204 on the thumbs up meter. Moonman Moo has been a member of this channel 23 months and is a gold bagel member. I thank you so very much. Bobby Atkinson, I've been a member for 11 months, Bruce. One more month until I am a 12-month member. Fantastic. Thank you. Flint Creek, thank you for the knee emojis too. Gaudy Money was a rough with no market. So glad we're back. We'll see you this afternoon. BP, thanks for and everyone. Have a lovely day. We'll see you this afternoon at 3 o'clock for the final hour trading, everybody. All the best to you. This is Bruce and Auntie Jen saying see you later from Palm Desert, California until 3 this afternoon. And we'll see if we can get you richer then. Thanks, guys. Bye for now.